Have you ever wondered why rent prices in some U.S. cities are actually dropping in 2026? It's a trend that's been catching many by surprise, especially after years of rising rental costs. With economic shifts, changes in the housing market, and evolving living preferences, some cities are experiencing a drastic decrease in rent prices, making them increasingly attractive for renters. In today's video, we're diving deep into the top 10 U.S. cities where rent prices are dropping and exploring the reasons behind these surprising changes. Whether you're a renter, an investor, or simply curious about the future of the housing market, these insights could change the way you view renting in 2026. Let's take a closer look at these cities and the factors influencing their rent prices. The rental market in the United States has been going through significant changes over the past few years, and 2026 is no exception. While many cities have seen skyrocketing rent prices, some are now witnessing a reversal of that trend. In fact, a number of major U.S. cities are experiencing a decline in rental costs, which might sound surprising given the housing market's previous behavior. So, why is this happening? First, one of the most significant factors contributing to the decrease in rent prices is the rise in mortgage rates. With mortgage rates at higher levels, fewer people are able to afford to buy homes. This has led to an increased demand for rental properties. But at the same time, the housing market has cooled down, especially in cities that were once experiencing rapid growth. As a result, rent prices have started to decrease in places where the market was once overheated. Another contributing factor is the shift in where people want to live. The pandemic led to a major change in work culture, with many companies adopting remote work or hybrid models. As a result, people are no longer tied to the expensive, crowded cities where offices are located. Instead, many are opting for more affordable cities, often in less densely populated areas. This shift in living preferences has made some cities more desirable for renters, creating an oversupply of housing in certain markets, which in turn is pushing down rental prices. Lastly, the economic slowdown in certain sectors, including tech and finance, is having an impact on rent prices. As companies scale back hiring or relocate, the demand for rental housing in certain cities decreases. This slowdown in job growth, coupled with a steady supply of housing, creates an environment where landlords are more inclined to lower rent prices to attract tenants. Phoenix, once one of the fastest-growing cities in the U.S., has been experiencing a significant decrease in rent prices in 2026. A large part of this can be attributed to the city's rapid growth in recent years, which led to an oversupply of rental properties. With more new construction projects and a high number of vacancies, landlords are adjusting rent prices to attract tenants. Moreover, Phoenix's affordability compared to other cities in the state is making it a top contender for renters seeking lower-cost living in a sunny, urban environment. Despite the decrease in rent, the city still offers plenty of amenities, including a growing job market, especially in tech and healthcare. Austin, often regarded as a tech hub, is witnessing a downturn in rent prices for the first time in years. The city has seen massive growth in the tech industry, but with the rise of remote work and companies shifting operations to other cities or adopting hybrid models, the demand for rental properties has softened. Additionally, with the booming housing market in Austin having led to a buildup of supply, landlords are now faced with the challenge of filling vacancies, pushing rent prices downward. While still one of the most desirable cities for tech professionals, Austin's rental market is now more affordable than before, attracting both locals and newcomers. Las Vegas, known for its entertainment and tourism industries, is another city where rent prices are seeing a decrease. The pandemic had a severe impact on tourism, leading to a slower than expected recovery in the job market. As a result, the demand for rental properties has declined, especially in the luxury and high-rise apartment segments. With new rental units continuing to enter the market and fewer tourists or new residents flocking to the city, landlords are lowering their prices to maintain occupancy. Las Vegas is becoming more affordable for those looking to relocate, particularly in comparison to other major cities in the Southwest. Detroit, a city that has struggled with economic challenges in the past, is beginning to recover and see lower rent prices. While the city has been working hard to revitalize neighborhoods and attract new businesses, the rental market has been slow to catch up. However, with fewer people moving into the city and the housing supply continuing to outpace demand, rent prices are experiencing a dip. This presents an opportunity for renters looking for affordable housing in an urban environment with a rich cultural history. Detroit's efforts to rebuild its economy are starting to show results, and the lower rent prices are one way the city is trying to entice residents. Atlanta is another city where rent prices are dropping, albeit for different reasons. While the city has experienced rapid growth in recent years, the expansion of suburban areas around Atlanta has led to a migration of renters out of the city's urban core. As more people flock to the surrounding areas, landlords in the city center are reducing rent to stay competitive. Additionally, the rise of hybrid work models has decreased the demand for city center rentals, particularly for young professionals. The result is a more affordable rental market in Atlanta, which is likely to continue in 2026. Charlotte, a major financial hub, is seeing a decrease in rent prices as a result of the oversupply of rental properties. In recent years, the city has experienced rapid growth, but now the market is cooling down. The shift in economic conditions and a reduction in job growth have caused a slowdown in the demand for rental housing. This has led landlords to lower prices to remain competitive. While Charlotte remains one of the best places to live in North Carolina due to its amenities and job market, it is now a more affordable place to rent for newcomers looking to settle in the South. Seattle, a tech powerhouse, is also experiencing a decline in rent prices in 2026. The city's once booming job market has slowed down due to the reduction in tech hiring and layoffs in major tech companies. With fewer people moving to Seattle for job opportunities, the demand for rental housing has softened. As new rental units continue to be built and fewer people are relocating to the city, landlords are lowering rent prices to fill vacancies. This shift has made Seattle a more affordable option for renters, although it's still higher than other cities on this list. Chicago has seen a steady decrease in rent prices over the past few years, and this trend continues into 2026. Despite being a major metropolitan hub with a strong job market, Chicago's rental market has been under pressure due to an oversupply of rental units. The migration of people to suburbs and smaller cities, coupled with the ongoing challenges faced by local businesses, has reduced demand for rental properties. As a result, landlords in Chicago are offering lower rent prices to attract tenants, making the city more affordable for those looking to live in the Midwest. Orlando, a popular tourist destination, is also experiencing a decrease in rent prices. While the city's tourist economy is beginning to recover, the demand for long-term rentals remains lower than expected. Many people who moved to Orlando during the pandemic for its affordable housing options have begun to relocate to other areas, leading to a decrease in rental demand. With the oversupply of rental properties and fewer newcomers to the city, landlords are reducing rent prices to stay competitive. For renters seeking affordable living in a city with great weather and plenty of entertainment options, Orlando is now more attractive than ever. Boise, known for its scenic views and affordable living, is seeing a drop in rent prices in 2026. The city, which had been experiencing rapid population growth due to its low cost of living, is now facing a slowdown as the housing market adjusts. With fewer people moving to the city and the influx of new rental properties, landlords are lowering rent prices to maintain occupancy. Boise remains an attractive option for those seeking affordable housing in a quieter, smaller city, but its rent prices are now more in line with other cities in the region. Several key factors are driving the decline in rental prices across certain U.S. cities in 2026. These factors have reshaped the housing landscape, influencing the demand and supply dynamics in rental markets nationwide. One of the primary drivers is the higher mortgage rates. As interest rates increase, fewer people are able to afford homeownership, leading to a higher demand for rental properties. However, with the economic uncertainty and rising inflation, many people are opting to rent rather than buy, which has led to an oversupply of rental units in some markets. In cities like Phoenix and Austin, this shift has been more pronounced, where an influx of new construction has outpaced the demand from renters, thus forcing landlords to lower their rental prices to remain competitive. Another significant factor is the shift in work culture. The COVID-19 pandemic fundamentally changed the way people work, with many companies embracing remote or hybrid models. As a result, employees are no longer bound to live in expensive metropolitan areas close to their offices. Cities like New York, San Francisco, and Seattle, which had previously seen high demand for rental units due to their proximity to major corporations, have seen an exodus of residents. People are now seeking more affordable living options in suburban areas or smaller cities where rent is lower. This migration has caused a reduction in rental demand in some cities, thus leading to falling prices. Additionally, the economic slowdown in certain industries, particularly tech and finance, has had a profound impact on rental prices. Cities such as Seattle and San Francisco, which were once booming hubs for tech professionals, have seen significant layoffs and slowdowns in hiring. With fewer people moving to these cities for work, the demand for rental properties has decreased. Landlords, facing higher vacancy rates, are lowering rent prices to attract new tenants and fill the growing number of vacancies. The oversupply of rental units in some markets is also a major contributing factor. In cities like Las Vegas, Phoenix, and Austin, rapid construction projects in response to growing populations have led to an excess of rental units. While these cities experienced high rental demand during their growth phases, they now face a saturation of rental properties, which means landlords must reduce prices to maintain occupancy levels. Lastly, the changing preferences of renters are influencing market trends. As more people look for a balance between affordability and lifestyle, cities with lower living costs, better access to outdoor spaces, and a slower pace of life are becoming more attractive. This shift is evident in cities like Boise, Idaho, and Charlotte, North Carolina, where rent prices are dropping as more people flock to these areas for their affordability and quality of life. In conclusion, the rental market in the U.S. is undergoing a major shift in 2026. While some cities have seen rents continue to rise, others are experiencing notable declines due to a variety of factors such as higher mortgage rates, shifts in work culture, and an oversupply of rental units. This creates an opportunity for renters to explore more affordable housing options in cities that were once out of their reach. Whether you're looking for a new place to live or simply interested in the future of the rental market, it's clear that 2026 will bring new dynamics to U.S. cities. As the market continues to evolve, keeping an eye on these trends can help you make informed decisions and take advantage of lower rental prices in cities that are currently seeing a downturn. If you're thinking of relocating, now might just be the right time to act.